Hello everyone and welcome to PivotBoss TV. I am Frank Ochoa, aka PivotBoss, and welcome to the Q1 2026 Market Outlook. Super excited to have you all here. Again, my name is Frank Ochoa, also known as PivotBoss. I am the author of the book Secrets of a Pivot Boss. I run the PivotBoss Discord trading room, also the creator of the PivotBoss proprietary suite of tools for traders in multiple platforms, and also your neighborhood-friendly market analyst here. So looking forward to today's programming here. We have a big-time slate, but before we get started here, what I want to do is ask you to give me a big like, give me a thumbs up, give me a subscribe here. Subscribe right now while you're there. Give me a bell to be notified here. And, we'll keep going from there. All right. Working on Echo right now. How does that work right now? Testing audio here. This is what we're working on with the current audio as we get all lined up here. Hopefully this is working on your end. Excellent. All right. Now, one thing I want to do again, just before we get started here, let me know where you're watching from. In the comment section, let me know where you're watching this from, anywhere in the world. Please give me any tickers that you'd like me to see as well. We can take a look at the charts with any tickers you may have. We have a full slate. I mean, I'm talking a 90 minutes, maybe even more of content here for today. But again, it all starts with your participation, and it starts with y'all coming here, and thank you very much for joining me. We have a lot to get to right now. Very excited about it. So let's go ahead and get started with our Q1 2026 market outlook. All right, moving on here. Now, in terms of the outlook here, as we get started, one thing that we need to realize is that everything is in a much different place in terms of pricing and value. Equities and markets overvalued at the moment, perhaps at highs. You have crypto markets that have severely been corrected, and you have everything in between right now, which is creating long-term opportunities in some areas, short-term opportunities in others, but there's definitely opportunities in a lot of spots. We had a great time doing this last year for our Q1 market outlook of 2025 and found a tremendous amount of candidates that doubled, tripled, quadrupled. Some even went up 10x over the course of the year. I'm not saying we're going to find those again, but we're definitely going to try. So it all starts with the indexes. Right now, we're going to go ahead and talk indexes here at the moment, just to go ahead and get started. Let's move over to our view here. Now, the indexes, patience is key for stocks. That's going to be something that is going to be a theme here as we move forward. Patience is key for stocks. Let's go ahead and get this thing going here with the big screen. You should be able to see my screen now. This is the ES in the daily time frame. Patience is key in stocks is the theme here, because look at the moves we've seen from the lows last April 7th. That was, of course, our day one entry here. Big time reversal off those lows. We called it as a buy that day, right? Now, for those of you in our trading room, you know this obviously. On this day here where the market was melting down, we called it the capitulation day on that Friday and said Monday could be the day one buy. And if so, we have a ton of stocks ready to go. And one of those was Nvidia, and of course Bitcoin, Ethereum. A lot of these markets bounced precisely off our levels and rallied not only back to recent highs, but also well through those highs, just chiseling through those highs into new melt up highs, which has just been tremendous, right? So here's what I tend to say. The big opportunities are had here at these lows after a significant correction. Right here, we're at all-time highs. As of yesterday, we hit 7,000 in the ES. It's hard to be in longer term here with the expectation of continuing to extend after all of the extension we've already done, right? So you have to keep it a little more short-term oriented on this end and a little more long-term oriented when you get the tremendous correction. And there are opportunities. There's a ton of markets that have corrected and are perhaps getting close to the point where we can get those massive reversals, big time doubles, or maybe even more. We'll talk a lot about those ones coming up. But when it comes to equities and stocks, we're at the highs here. This is tough. Patience is key. We need to let price come to us. And what that means simply is waiting for a bit of a discount before looking to be long. At these levels, even if we got a discount short term, it could be an opportunity to be long back to the highs, or perhaps push through the market structure at 7,000 and open up the next window above. If you don't know, the ES trades in 400-point market structure distribution. So 6,600 to 7,000, that's a 400-point distribution. Look at it right there. Just take a look and soak in this beauty right here. That 400-point range is 6,600 on this edge, 7,000 on that edge, and look at the movement inside that block. It's very, very routine, and when you go back in history, again, we can go back on a weekly chart here and look at how this thing lines up. We've been calling this thing, here's 4,200 to 46. Look at the perfect box there. Transition through the 46 to 5. Then another box in here, and you can just see how it walks up this market structure. Now, when we had that major correction to begin the year last year, 3 distribution correction. A 3 distribution move is significant, but when you get a 3 distribution move that goes 1, 2, 3 very quickly, it can lead to an overstretched type of situation that tends to snap back the other way. That's why we were so confident down here that we could get a tremendous bounce last year. Here, on this other end, got to be a little more cautious, got to be a bit more patient on this right edge. So that's the goal right now with ES, NQ, YM, RTY. Those markets right now could be a bit overdone. That doesn't mean they can't continue to be overdone. That doesn't mean we can't continue to trend higher. If we find a transition day through 7,000, we're going to rally. It's going to make a move. 7,200 would be a big time target that would open up 74 down the way. Meaning, if you push through 7,000 with a major transition day, if it goes to 72 before it retests 7,000, the odds favor a continuation toward 7,400, even if a retest at 7,000 occurs. So if we can make it halfway up, that next pullback could be a tremendous buying opportunity for a move. So that's the playbook for a continuation at the moment, but again, very, very overvalued. Gotta be patient as we deal with the ES at the moment. I'm actually a little more concerned whether we can actually push through 7,000 at this moment. If not, 6,800 midway down, and if we pull back to 6,800, it might increase the odds that we flow towards 66. And we haven't even talked PivotBoss pivots yet. PivotBoss pivots, my favorite, not just because they're named after me, but because they work. They work, and they're easy and simple, and they're based on the best data points the market has to offer. The high, the low, the close, the midpoint. Doesn't get much better than that. Those are the true edges of the market. And right now, that black line right there is the previous quarter's high. Quick reaction. Previous quarter's close is that dotted line. That dotted line is the midpoint, and that's the low. Anytime you close at the upper extreme of a range, I tend to look for a reaction here or a rejection that would lead us back to the middle of the range. That means the midpoint could be in play up here down the road around 67.50. And if you get to 67.50, it could also open up a move into the quarterly low. If we go full on quarterly low this quarter, this would be the best opportunity to look for a reaction and a longer term entry down the road. So we'll see what we get. Can't predict what's happening up here. We can only forecast with the tools we have and the price action that's preceded us. And again, these market structure levels have been tremendous in helping us identify where those key points of interest have been. When you add to it directional conviction, it really helps to open up some of these levels. Okay, let's take a look at the NQ. Now, the NQ here, this one right here, just tremendous compression, number one. Just so much compression in this one that the energy is thousands of points. 2,500, maybe 3,000 points at the most, but 2,500 points of energy at least. And that comes from this massive sell-off and bounce back in the creation of this range. Look at the energy right now. 26K is very, very important. If the AI trade comes back, because AI, a little crowded, a little overdone. We'll talk about AI stocks. You can look at the NASDAQ here. The quarterly range was just sideways with a large range. When that happens, we're in a trading range. When the close of the quarter is so close to the midpoint of the quarter, you're basically closing within the extremes of the range. And that's telling you you're in a trading range. We're clearly in a trading range right now. When you're in a trading range, you have to avoid the middle chop. You have to be patient for the edges. And so if we drop to this edge, great opportunity. If we come up to this edge, there is an opportunity to fade it back in. But because that's the counter trend edge and we are trending way up, you just have to be a bit more cautious about it. Be more risk averse, perhaps play to a closer target. Over here was great, but sometimes, it could keep going, right? So that's why it's better picking it up on the downside in an uptrending market. Okay, a lot of energy, 2,500 points of energy built up into this thing. Again, with the amount of strength we've seen in the tech trade, it needs time sometimes to kind of build out, build a range, build some market structure around current pricing, digest the recent movement, and then build that energy for the next move. If we're looking at a weekly chart, I know we're going way high in time frame here, but if we're looking at a weekly chart, look at this level right there, and that's CLVN. That's 22,500. What if we were to drop into that point where you have a rising, or at least that previous year's VWAP, you drop into that level up ahead? That could be a tremendous opportunity to bounce off of down the road. So I'm giving you some shorter term and longer term ideas here. We don't know if we're going to get a move all the way down there, but if we did and you're patient, it could be a tremendous opportunity for a rotation back up within the range. Right now, again, man, we just got to be patient. Got to be patient, y'all. Let's get to some of the chat comments here. Looking at Pakistan. There it is. Pakistan in the house. Alberta, Canada. San Francisco, California. Chicago. Brent is from SPX. I'm kidding, Brent. Good to see you. Malta. There you go. So we'll look at SPX Hut. Ghana in the house. Welcome. Yeah, ES and NQ here. Hey, Letic in the house. Good to see you. RVMD. All right. Anchorage, Alaska in the house here. OII. Quick, someone book Frank for a segment on CNBC. That's awesome. And some good stuff here. PivotBoss is the man. Good stuff, boss. Good to see you, Kevin, Adrian, Peter, and others. Awesome. Thank you for joining here. Thank you for providing some flow. Remember, give me a big thumbs up here. Let everyone know that we're watching. Here's something you can do right now as well. We're only, how long? 15 minutes into the stream? We're going to be going for 90 minutes to an hour, 2 hours almost. There's still plenty of time for you to hit the share button and send it to someone that you think might find this useful. So if you do that, we can get this thing really off and running, which is going to be a lot of fun. All right, so real quickly here with the NQ to finish up. A lot of compression here. Tremendous amount of energy down the road. But we don't really look ready for that expansion phase yet. There could be more build out. There could be more range development here in the near term before we see some actionable opportunities down the road. And when you open up the year like we have here, a little up, a little down, a little up, a little down, it's finding its sea legs here. I said a little bit earlier, it's like a butterfly opening its wings for the first time. It's just kind of getting ready, and then we'll see what occurs out of it. But don't want to be too early, that's for sure, at least on my end. Let's take a look at the YM here. Man, the YM is giving us tremendous movement to the upside. This is to begin the year, Friday, with a massive rally and squeeze. We have a tremendous move here that, again, has played out multiple times on pullbacks. So on some of the hardest pullbacks we've seen some of the biggest jumps. Hardest pullbacks, biggest jumps. And then even this modest pullback in the last week of the year, boom, right? Very, very strong. The blue chips have really come to play, especially against tech here lately. And the level that we're watching is 49K. And this morning, 49K was the level to watch, and a massive rejection occurred there. It helped us get to a key range midpoint. If you want to look what that looks like, here's the daily chart. You see that strong high, strong low this morning, right at 49K, and then a bounce back to the middle of the range at 49,439, which gave us a nice scalp target this morning, and a solid move off of that key range. Look at this price action right now in the Dow to start the year. These are hourly time frames right now. Just a lot of action here. The flow is good with this one. I would say keep an eye on 49K. That test right there is very reminiscent of a bad call I made earlier this year. It wasn't very bad. It was just 45,000 was hit right there. You see how it bust through 45, and then it came and it hit it on that day, and it hit it to the tick. Look at the low right here, 49,000. And I said, man, when it does that, it might be marking the low for a downside break. It never touched it again. It just rallied. And then at that point, I said, okay, we're in a melt up. Let's go. Over here, it's very reminiscent again. Look at that same magnitude test and bounce after the... I mean, clearly this market is watching 49K, right? Look at that 49. Look at that 49. Look at the transition day. Look at the retest. Are we just about to step higher here in the short term? Or is this pivot low right here, kind of like I said before, will it be a door that opens up the downside on a break? That's still there, but the last time I saw this movie, we rallied again, and 51,000 is the next upside target from that perspective. 49 to 51 is the target zone there. Wow. So I'm going to be watching that 49,000 pivot very closely. If we start to really run through that pivot, I think it's going to be a failure here. A short-term failure. And where would be the short-term target? So I don't want to just talk too higher time frame. If you're just trading for the next week or the next 2 days, you know, there's some opportunity here. If you fail here, there's a good shot to rotate back to the FOMC key level from December 10th. That right there. It's 47,782. And it's like an unfilled gap. It hasn't been tested ever since it took its bid on that Fed day. And you keep going up, 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 up until you hit a strong high, and then you tend to come back to the level and fill it. I thought that's what we were doing here, and we just missed out. We just missed out on it. So if we failed through 49, there could be a move that takes us back to 47,782. That's about a 1,200 point move. Not bad, right? So that's something to keep an eye on. But this Dow, this market remains super, super bullish. Super bullish right now. It's hard to fade into this strength. It's also hard to be big money long because the big money movement has already occurred. This is just a big stretch. You don't want to be the one left holding the bag at these prices if a massive correction does ensue. That's why I say just keep it short term up here. Keep it short term, keep swinging, those types of things. And then when we do see a mature correction, because we always do, that'll be the time to pounce longer term. One last one here from the equity standpoint here. Let's pop this one up. This is your RTY chart. Man, RTY has also been a star here. Look at the bounce April 7th and the massive rally back up to 2450 and beyond. This one, small caps tend to do really, really well with, especially in a rate cut environment. I know during the rate cuts recently, here, and there, it hasn't really rallied. It was a buy the rumor, sell the news. You know, it strengthened ahead of the likelihood of getting cuts in the Q4 and back half of the year. Now, is all that priced in now moving forward? If we start to get additional rate cuts, like if we get a surprise rate cut coming up here soon and we can start to look here, I mean, we can pop up Polymarket as we've been doing in the room here. Go to finance, for example, Fed decision in January, and right now 93% no change. 93% no change right now, way up here. And back here in late December, you can see it was between no change and a 25 basis point cut. So this is the leading favorite right now. Has this thing already kind of rallied on that potential for rate cuts? And now that the rate cut cycle may stop, do we start to top out a bit? Something to consider here for this one. I really don't like this kind of it's just kind of odd price action here. You can continue to kind of melt up, but something may come again. Again, all-time highs up here, or at least multi-year highs for now. I think the word ahead is not just caution, but patience. Patience and caution for these markets. But right now, very strong in the very near term here. Very, very strong here in the near term as today turned off the lows. Outside day up. Sorry, week. That is a daily bar. Outside day up. That's pretty strong. Not bad to start the week here for small caps. We could continue to see a short-term continuation, but at some point, do we start to see some reaction at these all-time highs? I'm got to be patient. Got to be patient. As we move forward. Now, let's see here. The next one here that we're going to talk about. Where are we at? Crypto. Let's talk crypto. This is going to be good here. So crypto. Big opportunities in crypto. I always say the biggest opportunities come after the biggest falls. And right now, when you look at the market, certain segments of the market are still holding at or near those all-time highs. And then certain markets have corrected. Crypto is one of those markets that's corrected tremendously since the October timeframe, especially since the November timeframe. But with those massive corrections comes major opportunities. Major opportunities, and that's what we're looking for here. When we just looked at the equity futures, I'm saying patience, right? Patience and caution. We're too high. Keep it short term. Big money doesn't go in at those levels, right? They're trying to sell at those levels at times. It's the opposite in crypto right here. Crypto could provide doubles. 50% returns, 100% returns, and even more, which is crazy to think about. I'm not saying it's going to do that over the next month or two, but this year, over the first 1 to 2 quarters of the year, and then on the back half of the year, we can have some tremendous moves in crypto. So let's take a look. Let's take a look here. Right here, you can see Bitcoin. This is Bitcoin. Tremendous opportunities here in Bitcoin. A massive pullback, right? Look at this pullback here from the highs of 127s to the lows of about 80,700. That correction right there, 36.5%. That's a sizable correction. Very, very sizable. It's in line with corrections we've had in the past as well before the next major rally. I love me some TradingView. This is unsponsored or not sponsored. But just really good platform here. 32% was the last pullback here. 32% to begin the year. Now, if you were part of my 2025 Q1 market outlook last year, January 7th, said, okay, be patient here and wait for the 75 to 80 zone. Because if you get to that zone, you can get a 50% return up to the 120 to 125 zone. And as we got closer and closer, of course, we upgraded our entry zone to a 74-75 zone. And then it hit it. We said it's good to go. Day one, April 7th there, 75 turned to 100, 75 turned to 125. Right here, it's a 50% return plus. And that's all she wrote. Right here, we called it a strong high, perhaps the high, and then it comes over here with a super strong 6-day rally. We quantified the rally that day. Let's see, 1, 2, 3, 4, 5, 6-day move. Down here, we use the PivotBoss Advanced ADR Indicator. This is the pro version. Look at that right there. That move amounted to a 200% of ADR move. It was a tremendous move. And one thing we did that day was said, you know what? When you get a huge move like this, what tends to happen? Does it keep on going? Or does it turn? And I said, well, if you get a huge move like this and it occurs within a trading range, you tend to turn. So I mentioned that might be the high. It tends to turn. Look right here, for example, and we pointed at this day and said, look at that 6-day move. It hit the edge and it turned, right? And there was countless others that we looked back on as well that were very similar, where you had similar moves and a turn. It turned. And ever since then, it's been the high, a very strong high at our 125%, or 125,000 level. Now, the 125 level, that's a 25,000 market structure increment. I know many of you know this, especially if you're in our trading room. We hear this every day in our room. By the way, if you want to jump into our trading room, we do have an offer coming up here fairly soon. You'll want to jump on that offer so you can join us in the trading room. But when we initially talked about these 25,000 increments, it was when we pushed through the 25,000 below and started to develop this rounded bottom below 25K. So we said as soon as we push through 25K, there's going to be a shot to double this thing into 50. And then if we do that, there's going to be a shot to continue into 75 and go get those new highs. And you can see there's your 25, there's your 50. Look how 50 went to 75 perfectly, then pulled back to 50 and had this great 25,000 point increment range. Then it transitioned through 75 and went up to 100, and you had this great little range. And then you push through 100 and go into the 125 and have that great little range, which is just off the chart. This is where things are starting to get a little dicey. You look right here, and you look at the failure here at 100K. The last couple of times, and I know for those of you in the trading room, you know because we did this live, when this thing hit 50, after hitting 75, we said that's a long for this level and then through it into the next level. And then to begin the year, we said the same thing. If it hits 75 here after hitting 100, then it's a return to 100 and then through the level. When it came over here, I said the same thing, but I reserve the right to watch it here because things look a little different. And if we fail at 195K, we could ultimately fail through it and into 75. So we failed through 100K and we've not gone back into that level to test it ever since. We have this narrow range here. It's getting a little dicey. If we come into 100 or can't even test it from below, this thing may drop into 75. Do we even push into 50 beyond there? I'm not thinking 50 just yet, but 75 is going to be a big test. It's going to be a big time test. And one last thing I want to mention with regards to Bitcoin here, the amount of energy we have in here. This is a 31-day compression here, starting from this day here. Watch this. Let's make this 31 days. That's your compression right here. We've had a couple of moments here where we've had compression of that magnitude before. Most recently was here in October when it had this compression That's the same amount of compression as we're seeing here, and bang, the release of energy was up, and all of this out of that range. So from this, that's the release of energy. That's 40,000 points of energy. That's extreme. But over here, this thing moved 37,000 points of energy, or movement over here was 31.5. It can easily do that. And this one is about as coiled up as it gets. There's 30 to 35,000 points of juice in this range. 30 to 35,000 now. And every day adds a little more. Every day adds a little more. So if we bust through 95 and rally 30,000 points, that's 125. You're back to the highs. But what if we fail? What if we fail through 84,000? Do we open up 54,000 down below? I think if it were to make a run for the downside, it may go up first, maybe hit 100, and then drop 30 into 70. So I don't think it would be 30 from an 85 drop. It might be from a higher level down, so that it doesn't go too low. We'll see what we get. But here's the point. If you want to be long for the long term, I'd be patient and wait for 75K or better. 75K takes you to 100 and 125K. It's the same trade we talked about last year. And yes, you're not going to expect the same thing year over year, but the levels are the levels. And the levels have been tremendous. If you fail at 75K, if this thing fails, then you start to open up the lower distribution between 50 and 75. So we will see what we get in that zone, but I think be patient. If you want to be short-term oriented and we don't get a move down first, an upside breakthrough 95, 96 could open up, a return to two levels above. Number one, 104. And number two, value up here, 116. That's kind of where it sold off away from. Then it retested. Value on the short-term time frame. I'm not talking about way out there. Value on the short-term time frame here, kind of the last 6 months or so. Right here. 1, 2, 3, 4, 5. Yeah, about 6 months of data here. So you're kind of going back to that HVN above. There can be that short-term opportunity. If it's there, I don't mind having a swing. Because even if this thing goes from, say, 90 here up to 115, that's quite a percentage move. Here, I'll do it again. Look at this right here. You go over here, hit that price tool. Say that's the low right there, and we take it to value. That's 29% return. Not bad. I'm not going to sneeze at that at all. So if we do get that upside move, I don't mind being a short-term participant. I think the bigger percentage moves come if we drop into 75K. All right, let's take a look at Ethereum. Ethereum here has a shot to double. We're looking at 50% return for Bitcoin. Ethereum has a shot to double. And if you look right here, again, a lot of compression, multiple 6-week compression again. If you look down here, it's about as compressed as we've seen back here. And look at the breakouts. From here, bang. From here, bang. I guess you can say there a little bit right here, and it went bang, bang, bang. And now we're here. A lot of energy. So when we do see some of that expansion, 1,600 points easy. It can get as much as 2,000 or more. But I'm thinking if you get 15 to 1,800 points, 1,500 points would be huge. Now, where is the entry? If this thing drops another leg, and I know that's a big if, but it could certainly do it, you want to look for an entry zone between 150 and 2,000, because that will double back up the line. If we believe that prices are going to retrace back into the prior price zone up above, then we can double with a move down here. That means being patient for maybe, what I've been saying is 2005 right here. That's that level right there, 2005, because that doubles to 4010, which is our FOMC key level from October. It went mad offered and never came back to it. That means it's left unfilled and ready to be tested at some point. So if we get one more dump and can hit 2000, you have a double if you're patient over time. How much adverse excursion comes with 2000 though? That's the problem. Because if you recall last year, I said the same trade as well. When prices were here in January, I said we're waiting for 2000 to 2100. It's the same exact levels. But when we got close, I said this doesn't look right. The markets are still correcting. We need a further capitulation phase. We're holding off, and the new level is 1400. And boom, the new level here. What's this low, by the way? 1387. Wow. 1387, a mad CLVN down there. Couldn't have picked a better level. So when we offered this one last year, it was 1400 to 2800 doubles. And if you can double it to 2800, you can get out of the entire thing and re-entry at 22 and double again to 44, or you can keep holding and double it, triple it to 4200. We offered both of those. On that day it said sell, on this day it said buy, and a continuation. This thing went up tremendous. The reason we also had a lot of conviction is because this one has great market structure levels as well. Right now these are 750 point distributions, and it's the orange one. So 1400 here. So if you're following along, mark 1400, 2150. What is that one right there? I can't see. 2900 there. 3650 here, 4400 there, and the last one, 5150. Beautiful. And watch how it trades off those levels. Now, a lot of chop in the middle of this expanding range. What if we dump all the way to 1400 to 1000? So if you get to 2000 here, and yes, I'm saying there's a good shot at doubling at some point, that doesn't mean that this thing can't drop further first. So we have to judge the test and see if it's appropriate when it happens. And then make an entry opportunity that can take us back up the way. So waiting for this thing to flush out. We have a ton more to get to. I'm going to continue to go faster and faster as we go. But some of the big ticket items, wanted to spend a little bit of time on those. This one is XRP. XRP right now, tremendous key range here. Tremendous key range in XRP. This just cemented this key range, locked it in today. Look at this key range right here. Strong low, strong high, pulls back to the midpoint. Impulse rally, pulls back to the midpoint. That gives us a new key range. I love me some key ranges. They provide tremendous opportunities. There's two key ranges on the board here, and one's already working great. This one here gives us a target at $3.04, which means you have to kind of be patient for a 150 entry. If it drops to 150, you can double it to 304. I like a 150 idea to 304, and then that's your double. And then long term, does this thing work its way higher? Say to 450, right? Or more. So this one has a potential to double, but you have to be patient in it as well. It's already corrected 52% off the highs, and the highs were only in July, right? So massive correction, especially after the initial bump after the IPO of the futures. So for this one, I like it a lot. I think there's a ton of potential in this one. A ton. And I also feel like they have discounted this one tremendously aggressively to pick it up cheaper, perhaps. Pick it up cheaper. One more aggressive discount could be good to go. Can you get a 150 entry? Now, we can go really pie in the sky and say 125 or even $1. We'll see what we get. Remember, if Bitcoin and Ethereum drop to those lower levels, like we said, 75K and 2,000, then this would easily get us down below 150 as well. Got to be patient, but this one provides tremendous opportunities for a double from 150 to 3. And then perhaps even beyond that. One of my favorite approaches is to divide CVPOC by 2. Divide it by 2. CVPOC here is 286.35. Divide that by 2, and you got 143. Why divide it by 2? Because if you have a mature VPOC, and you got a lot of participants that have all traded there, and then it's taken offered, at some point you'll go down, down, down. Maybe you reaccumulate, and then you return to the scene of the crime. You return to value down the road. Not everything will do that. The best of the best will do that over and over again. I mean, you might have a stock that's just continuously getting crushed. It's never going to make a move back. But I'm talking about good opportunities that tend to bounce back. This is going to be one of them. That level right there, divided by 2. Anytime you see CVPOC up above, divided by 2, that's a good first test entry, because now you could double your position by returning price to value. Tremendous. All right. This one locked in, and there's evidence to suggest 375 easy to return at some point down the road. So keeping an eye on this one. I know I've mentioned $2. 2 to 4 could be a double, and that's based off this larger key range. I'm trying to be a bit more greedy right now, waiting for better pricing. All right, Solana. Let's talk Solana here. You know, for Solana, I'm going to move over to the USD version here, and we're going to look at the spot price, because there's not a whole lot on the futures, but there's a lot of great price action here in Solana in the higher time frame. By the way, I know I'm spending some time on crypto. If you are not active in crypto or don't want to trade crypto, there's also the crypto ETFs. So one thing you'll look at right here, IBIT is the Bitcoin ETF, the cash ETF. ETHA is the cash ETF. XRPI is the cash ETF for XRP. And then VSOL, the new ETF for Solana, very, very new. These we've already had tremendous success with. We can look at those here shortly as soon as I'm done with this, but tremendous success. We'll look at those for those of you that don't have a lot of experience in crypto but want some exposure. The ETFs have been tremendous. Solana here. I'm a holder from 100 over and over again. I'm still holding from 100, and again, the goal is 100 to about 250, 100 to 250, 100 to 250. And we're, a reaccumulation point if we hit 100 again for a bounce back up. This has been a tremendous range in Solana over time. You can see right here, that's your $100 level. Maybe we don't get that low, but again, like I said with those other markets, if we get that one more leg down, we might get lucky and get 100 again. 100 takes you back to 200, that's a double. And then 250 is a 150% return off the 100. That's been the range for 2 years. Again, that doesn't mean it's going to play out perfectly like that again, but it's the range for a reason. That's the range the market likes, and the way you trade a range is to fade the edges. Got to be patient for the edges and just wait. And any test at 100 could be tremendous for Solana. Now, if we look at the VSOL ETF here, you can see it's brand new. So you're going to have to do a little work here to say, okay, what's this level against this level? For example, if price dropped to that $100 mark that we're talking about, then maybe that would be about 13 bucks here, something like that. And then you're taking, say, 13 up to 26 down the road. For 150, you're taking it up to 39, right? So something like that. Or is it something like that? You get the math. So we'll let this one continue to build out. We'll follow back on this one. But IBIT is tremendous for Bitcoin. Last year, we had it as a buy candidate here for a return to the middle and across the range. It followed perfectly. Perhaps our best ETHA, this one was our best one, because on the 1400 that we talked about that could double to 28 and maybe triple to 42, The call on this one was buy 11, take it to 22 for a double, take it to 33 for a triple, and it did it. It did it perfectly. It did it well. Here's your retest off 2200. That was the retest here off the 1650 for this one. Wow. So these are in play. You know how to trade an ETF. It's no different here for a crypto ETF. These have paid. So if you got any anxiety about buying crypto or don't have a Coinbase account or don't have access to crypto, these ETFs do a really good job, at least from my experience over the last year or so. All right, now let's move on to some crypto. Actually, you know what? Let's go crude oil. Let's finish this thing with the futures and ride with crude here. All right, let's grab it. Yeah, that's, man. I'm telling you, crude oil is one right now that has got me thrown for a loop a little bit because I know what I keep saying here, but it's just not doing. So here's the deal. Crude oil has bullish seasonality right now. Bullish seasonality, but it's had a heck of a time really lifting over the past year during these seasonal cycles. It's being clearly held down, but there is some aggressive pop that's happening at times, including today. It rallied over 4% today. Tremendous movement, again off the 56s. Crude oil, bullish seasonality. You can usually depend on that bullish seasonality really, really well, but lately it hasn't really been there. So I'm a little in the air about this one, but I can definitely see the potential. Does it have the ability to follow through? That's something that we'll be covering here. So let's go ahead and take a look at that right now as we look at crude oil. Here is the daily time frame of crude oil. So if we look out, let's just do a quick look at the weekly chart. Quick look at the weekly chart. I'm going to drop off a couple of, let's drop the PivotBoss bands for now. Let's even drop, okay, yeah, we'll do this one as well. Make it kind of clean here. One thing you'll notice about crude oil over the last 5 years is, number one, it just didn't want to trade below 64s. Just never did. You got to 64, it was a buy. Every time we looked at it, it was a buy. There were massive rejections every single time. Tremendous rejection events. Fast forward to this year, we get into 64. There's no buying there. Pushes down below. Gets close to the 54s. And then bounces back up. Back down to 54 close this year. So over the past year, we got in below the 64s, and we just haven't really been able to get out of it. It's very odd. Very, very odd. And you can see any bounce has been heavily rejected. Yeah. So this one right here, let's see. Right there, bang, 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 bang. That's going to be something you got to keep an eye on. Yes, we have bullish seasonality here, but are we seeing the potential for a launch this time around? Off this zone, I'm seeing the potential. I am. It just hasn't gone. So here's what to look for. Number one, you have this key range here. That's the key range. That's the one. It's this low, that high, the midpoint here. And when we cemented that key range here, November 6th, I mentioned we could get a lot of chop first before we test an edge. So just be patient. So I literally didn't really look at crude. And those of you in the trading room know this. We didn't look at it a whole lot during this cycle. And then we started to sell off. And it was like, ooh, now it's going. Okay, let's pick it up. Let's pick it up. And then on capitulation day, right here, December 16th, I said, this looks like capitulation. We are pushing through the key range pivot low. that if this is capitulation, the next day might be day one bounce. Day one bounce right there. Bang. Okay, that's day one bounce. That means a retest of the level should be bid for a return to the FOMC key level above 58.36, 58.35, whatever it was. We got there. So it has at least been able to do the least a bit to get to where we're trying to get to. Now, this is the hard part here is now we're getting these retests on this right edge. Very, very high volatility, shakeout, shakeout, shakeout. The low is still hit in. You have this level over here that continues to just hold. Today had a massive squeeze. Man, that squeeze was tremendous. Tremendous movement out of the squeeze today. Is it going to be day one for a continuation? I want to say yes. I do. I'm hesitant. I think this is one where if you're going to be long crude during this seasonal cycle, the seasonal cycle takes you into the beginning of March. So you got about 6 to 10 weeks. You got to take this level bid right here. You got to take 58.50 bid, and you have to bust through 59s. You got to do it with some style because it's been rejected. It's been rejected. It's held. This thing has a downtrend that just won't quit. It's tough. But there is tremendous opportunity in here right now. I have a tough time seeing it bust through 54s, but it could certainly get down there and keep testing. I'm having trouble with this one right now. And if you want to look at seasonality here, let's see, is it this one right there? Bob, let's look at seasonals here. And I'm going to take off 2021. Actually, no, it's good. It's good to go. Let's put the average up here. This is seasonal cycle right now for crude. And this is just a line graph. So you can see to begin a year, that's your beginning. That's your average. That's the first week of March. You tend to have a bullish seasonal cycle. A bullish seasonal cycle there. And then you know, whatever, here and here, there and there. We tend to talk about that as the selling opportunity, right? It's all right there. This is how you tend to start. Look at these 2 years here, though. This green year right here is 2025. Completely opposite. And that's when this whole thing started. 2023 is this aqua year. So 3 of the last 5 years have been up. These last 2 very down. Very odd. Okay, so I'm still working on trusting the seasonality here lately because last year was just not good against it. Maybe this year's a little different. So if you're looking to be long crude, you definitely have to continue to defend 56s. You got to get through 59. And I'm looking at 63 as the high of the quarter. 63 as a really good go-get point. Because if this market can push through this midpoint right there of the previous quarter, it opens up the previous quarter's high. And that's 63. So can we get through 59 to get to 63? It's not that far, but this market has had a tough time going up. So that's crude oil for you. Again, that market here, it's tough sometimes when this thing, it just seems like it's being manipulated to be held down, keep those gas prices low, that type of thing, right? Let me go over here and get to some commentary here in the chat. Let's see. Our next topic right now, we want to talk a little bit of metals, or should we jump into some Mag 7 stocks? I do want to do metals, but it's going to be quick. Let's do metals, but make it quick. All right. Let's see here. Okay, we'll start with GC on this one. All right. There you go. Okay. For GC, number one, let's start on what's up with the metals here. gold with an unprecedented rally last year. You had silver, unprecedented rally, platinum through the roof. They're all just exploding to the upside. And that tends to happen in those intense style auctions. You just kind of go with the flow. Let it do what it's going to do. Don't try to sell and be the smart guy thinking it's or smart gal thinking it's the top. Instead, just read the cues. And we've been pretty good about reading the cues in these markets, but at the same time, when you've had this much expansion, this much range expansion, it can tend to be difficult, especially initiating new trades, new positions at these price levels, because now the downside risk can be tremendous. So you have to mind your risk during these extreme auction events. You can really get wiped out in a big way. Now, of course, silver and gold are producing at a rate even Bitcoin would be envious of right now, which is tremendous. They're just continuing to show tremendous strength. But do we get a little bit of a pause? I think so. I think we do. Let's see what that looks like right now in gold right here. So, looking at gold, look at this move. Recently, that massive push to the upside. Recall last year, and I know I'm going back to last year a lot. Our trading room traders know this a lot. Look at that 3,000 level right there. I mentioned if we can push through that 3,000, it opens up 3,500. Because that's the next 500 point distribution above. The 500 point distribution before that was 25 to 3,000. This is what I call market structure distributions. Just price-based levels. At times CLVNs in the volume profile. Tremendous levels, because the market doesn't just go from $10 to 300 in one move, usually. It takes off bite-sized chunks, right? Bite-sized chunks. Let's go 40 points here in this range, then break out and go 40 points in this range, break out and go 40 points, etc., etc. In this case, 500 points. And so whenever we developed this impulse move, it was like, okay, that's the 500 point range. We're stuck for a while, and watch 3,500. As soon as we get through 3,500, 4,000 is next. Very quickly it did that. Once we started to push through 4,000, just like we said earlier, can it get to 4,200? Because if so, it increases the odds of going to 4,500, even upon a retest of the lower level. And it retested here and continued and hit that 4,500 level. Wow, wow, wow. Now what? I think we're already doing what is likely going to continue to happen, which is digest in this range for a little while. Just like it digested in this range for a while, just like it digested down here before the next expansion phase. That means we could have movement between 4,500 and 3,900, or 45 and 4,000 for a while before we're ready to get that next major breakout move. The good news is it's every 500 points. And we can do simple math. I'm smart enough for simple math at least. And that's 45 plus 5. That takes you to 5,000. 5,000, the next major target up. But what I like to do at times is wait for the lower level to be hit, 4,000, pick it up there, and then you take it to 5 from there. So 4,000 to 45 to 5,000. So can we get a pullback to 4,000? That could be the next 4 to 5,000 markup phase. But we got to be patient in here. And yes, we can bust through 4,500 tomorrow and just start again. It's just be careful of the melt up phase at times. It can get really crazy to the upside, but then in one day, it wipes out multiple days or even weeks of action. So just be cautious in this one. Still, perhaps a ton of upside to go. But I would like to see a mature correction first. Looking at silver. What a move here. Now, I've marked the price range here. This is unprecedented. 200% move out of this one from the lows in April. That's our April 7th lows from last year. April 7th lows, 200% return to the current double top we're at now. 200% return. What? What do you think is going to happen next? Do we go up another 100 or 200%? Or do we digest? Digest the recent price move. And I'm always on the digest train when it comes to that. I'm always thinking, okay, after this big move, you got to get some sideways here for a little while. You got to get some sideways at best before the next move happens. That's what happened this time here. At the beginning of Q4, after this wave up, sideways, 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 finish on strength. And it looks like we're already kind of developing that already, as you can see here. Nice little range. But like I said, it's hard to sell into these markets right now. I would not be selling. It's melt up, continuation, and if we have a mature pullback, it could be buying opportunity. Gold's had a much better run overall, like a steady continuation for a longer time. Silver really jumped on the scene here in the back half of last year. So if I had to worry about one over the other in terms of adverse excursion, it'd likely be silver. Maybe too far too fast, so the correction might be deeper if it did correct here. And one of the levels to watch might be the 60-80 level. That's your FOMC key level from December 10th. So if we fail up here, especially after this double top, do we return down to this December 10th level? Yet to be untested. Perhaps that would be the target if we start to see some cracks in the foundation here. So that's a quick update on metals here. The next one, of course, I'd like to get to Mag 7 stocks. Mag 7 stocks here. The Mag 7 stocks, I feel like they're lagging. I feel like they're lagging right now. This is something that has been happening for a little while now. It starts with NVIDIA. NVIDIA is the #1 linchpin here to a lot of the market. It's been that way for a while. And if you look at the last 2 quarters, it hasn't really gone anywhere. Pretty quiet, pretty sideways. You see other Mag 7 stocks, and they're just getting crushed. Just pick a stock right now. Microsoft, Meta. You're getting some weakness here. Google is trying to run away with the thing by itself. It's so strong right now. Google is. And Apple's also gotten hit here recently after being very, very strong and outpacing its Mag 7 counterpart. So Mag 7 right now may be overvalued. Lagging behind while some are overvalued. So it just depends here. But it kind of holds everything together. AI, the story's not done. What are we, 3rd inning of a 9-inning game or something like this? However you want to call your sports metaphor here. We got some more cycles in AI coming up, but there could be some, relative strength, relative weakness in stocks within the group. AI space is pretty wide in general, but NVIDIA is the one that's kind of running the whole show. And we'll look at it right now, but man, it's making me a little nervous of another run to the downside. So let's go ahead and take a look at NVIDIA here. Let's pop up. There we go. Should be able to see my screen and NVIDIA now. And this is going to be kind of a short and longer term look. But if you just look at the quick chart over the last 2 quarters here, look at that sideways action there. A lot of sideways action for NVIDIA. A big strong top at 210, which is a market structure level. If you want to know the market structure levels for NVIDIA, they're clearly marked on the chart right now. Look at that. 90 plus 30 is 120, plus 30 is 150, plus 30, plus 30. And then look at the precision movements off of these levels over time. It's just incredible how well the markets trade off of these market structure levels when they, are clearly evident in the charts and you kind of start to see them. One thing that tends to happen though, when it gets a little fuzzy here, you see this market structure level at 180? Look how price is just hugging on top of it like this. And then over here hugging on top of it. That's doesn't usually happen. You know, it's a market structure edge for a reason. It's an LVN. It's a significant zone. So it's either going to bust through or turn down. It doesn't chop on those zones. So what does it mean when it chops? I call it merged cells. These are merging the distributions here like this. So what was once, you know, of distribution here and the distribution up here is now merged, and it's chopping around the midline of one of those key levels. That's a tremendous buildup of energy phase. And when you have a tremendous buildup of energy after a massive appreciation in price, we don't have to guess what the appreciation was. Let's just mark it up here. That was a gain of 144% from the lows. And remember, we gave everybody the entry zone. We said let it get to 90 and you can double it to 180. But the 150 to 155 target was our primary target. That was our primary target. But 180 was the double. It did that and then some. So whenever you see a move of this magnitude and then you've paused for a while, is it a distribution phase or is it a reaccumulation phase? Something we have to ask ourselves here. It could certainly be a distribution and we drop from there. And in that case, against market structure, you drop into 150 and then you return up the ladder and try to bust through again. And that's where the big movement comes out of this range. So, man, we got to be patient here. I feel like this thing has more of a rotation down toward 150, and then 150 might be the zone here where some better opportunities can be had. Now, short term, this is a fun trade idea in the very short term for NVIDIA, and it's based on the current 9-day trading range. 10 if you want to add today, but if you double click here and make this 9, PivotBoss Advanced ADR Indicator, this is the Pro version. We've released some Pro versions of our tools to our Masters members. PivotBoss Masters members get our most cutting edge tools, and sometimes indicators, sometimes signals, scans, various tools here. And they've been awesome here lately, but the Pro upgrades have been significant. We're going to be working on releasing more Pro upgrades here to our tools and also getting them out to the masses as well. So if you're not a Masters members, you'll be able to get your hands on it as well. But right now, NVIDIA, with this tool, shows compression, 58% of compression, a 10-point range over a 9-day basis. Let's make this 10 days. Let's go ahead and do 2 weeks here. Now it's compressed there. When you look at the compression here, over the last 100 sessions here, this is in the second percentile, the tooth percentile, the second percentile here, which means this is the second or maybe third most compressed range we've seen out of NVIDIA in that stretch. If we go back a little bit here, you can see the other two. That's one. The other two are here and here. And when you see that compression, look at the expansion that comes up afterwards. That compression, expansion right there. You get this compression here, which is there, and you get all of that volatility that comes. This one was also compressed right here. Boom, big movement out of there. This is what we have again. And the expansion has been easily 20 points of range. Look at this right here, 20 points of range easily on a compression of this magnitude. So maybe 15 to 20 points easy coming up. Is this a downside break? Or is this a failed breakdown before a magical rally tomorrow? Sometimes when NVIDIA closes at or near lows, there's a tendency for it to gap up above its midpoint the next day. For example, when you look right here, it closed on the lows. The next day, it gapped above the mid. That's what we call an MGR buy signal, and that can tend to be bullish here. We're not closing on lows just yet, or we didn't close on lows here, but do we gap up above that mid? If you see that tomorrow morning, or pre-market, if you see price trading above that mid, it's going to be kind of a long morning, a bullish morning to the upside, at least on the opening move. That's going to be something to keep an eye on, and that keeps us in the trading range. So if we were to break out at some point 15 to 20 points in the direction of the move, which way are we going? I'm not quite convinced that today was a breakdown. But you can clearly see the rounded top here. Look at this rounded top in the 60-minute time frame. Look at the break at the rim of the pattern. Any pullback, is it sold for a drop here? This is a powder keg ready to explode. It's ready to go. So watch this one here. 15 to 20 points could be ahead out of this one. And if we look at AVGO, I know it's not a Mag 7 stock, but I call it a Mag 9. I add it there with Netflix on top of the other 7, so I got a Mag 9. This one looks very similar to NVIDIA as well. Look at the last several months. That's all sideways here. A lot of range buildup. The recent compression here looks like it's starting to try to break to the downside as well. And when you look at this compression and the potential for range expansion ahead, I mean, is this a 70-point breakout move coming up ahead? It's been able to get at least 70 points and as much as 90 on these breakout moves since September. So that's some big time potential here. If it's going to see some expansion out of this range today, closing down below that range, again, keep an eye on the midpoint tomorrow morning, both NVIDIA and AVGO. If they're going to gap up and open above those mids, it could be a bullish open tomorrow for those stocks. And anybody left short here could be trapped. They have to buy the cover. That short covering lifts prices to the upside. All right, let's look at Apple. Now, I mentioned Apple here because it's been so bullish, super, super strong, but recently here put in a very strong high. Look at that strong high right here, a right edge. That's a failed new high above multiple week highs, and then it just dumps. That's aggressive. That's aggressive price action. This is also taking a short-term time frame value level offered right here. Very aggressive. The one thing that's concerning about this Mag 7 stock is that it is already breaking through the midpoint of the previous quarter's range. And when you break through the mid, it opens up a move into the low of the previous quarter's range. That low is 244. We're trading 260 right now. And if we can't recover 266 at some point, there's going to be problems. We could come up into that level and drop into this zone here. So that quarterly low could be in play up ahead for Apple. If we get there, as always, anywhere between the quarterly low and the 25% extension could provide a trap opportunity back to value up above. Short-term value, that is, which is about the 272 level. So breaking through that mid, very concerning. So this is what I mean. Some of these Mag 7 stocks clearly lagging. There's some pullbacks right now. Look at Netflix. This is below the previous quarter's low right now. It's spent multiple days down here to begin the year and hasn't bounced. That's concerning. You know, if something's on sale and it's not flying off the shelves, nobody wants it. What's going on there? I mean, it is on sale below the previous quarter's low, and it's no budging at all, like no kind of response. So that's concerning. That's on a quarterly basis. If we look at this on a yearly basis, let's bring up the yearly pivots on this one. Let's see, where are the yearly pivots? Let's scroll. Not 5 seconds. Yearly, there they go. There are the yearly pivots. A little bit lower to get the previous year's low. So you got to get to about 82. So I'm not sure what's up with NVIDIA, why it's hit so hard here. But clearly in our trading room, multiple traders in our room had pointed out the major rounded top way back when. We talked about it. We said, oh no, this doesn't look good. And when you have a rounded top of this magnitude and you break down like we do, break down and retest, you tend to go to the prior pivot low. So we pointed to that level back in Q4, and that level is still the level we're looking at now. I guess we got to go down there and grab 80 for Netflix and then 80 might provide an opportunity here. So we're about 10 points off that right now, but this is looking dire. So some of these Mag 7, Mag 9 stocks clearly pulling back. That could open up a little bit more downside up ahead, which provides some opportunities, which could be good. Yeah, Aram, that's awesome. You know, I wondered that as well. Aram mentions here, after more than 2 years of only hearing your voice, actually seeing you on screen was a bit surreal, but in a good way. That's great. I thought the same thing. You know, most of the time, and I didn't show my face for a reason. You know, just to kind of keep the voice there, keep it on the charts, not be distracting in any way. But it's time to go full glam here. Let's go. Back to our roots. All right. Okay. Now, I want to move on from Mag 7 because those aren't the opportunities I want to talk about here. There are additional opportunities. Let's get hairy here. Let's talk some crypto right now. And let's see here. Yeah, let's start this way. So we're going to go with crypto stocks right now to watch. And basically, with regards to crypto stocks especially, there are a ton of them. From Bitcoin miners to whatever, treasury companies and all the other stuff. Some have pivoted from mining to AI data centers to provide to the AI trade, and that's been tremendous for some of those companies as well. There's a ton. Be choosy, be patient. They're not all good. But the ones we've chosen over time have provided some tremendous opportunities, some tremendous levels, key levels to work from. And that's what's important here is it's being choosy, having a group here to choose from, and watching and being patient for the levels to come to you, and then appropriately jumping in when it makes sense here. So let's go ahead and talk crypto stocks here, and we're going to start with MicroStrategy. Ironically enough, it's funny because I didn't really give MicroStrategy a whole lot of love, a whole lot of attention, especially in the back half of last year. And they were losing the headline race, the headline risk race there. They were losing to MSCI until a couple of days ago. It's just been a risk-off position, and it's incredible because it appears that their price and their market cap is below the holdings of their assets with regards to Bitcoin, which is wildly discounted. Is this an opportunity? Yes, it is. And again, I don't think I would have said this just 2 weeks ago, because I've been very bearish MicroStrategy here lately, or strategy as it's called now. But there's an opportunity for a double. I wouldn't say that this is one of those stocks that you bet the farm on to double. It's a high risk double opportunity, but a double opportunity nonetheless. And it comes from the 150 to 300 level. That's it. Right here, previous year's low, and it's 150. This is your previous year's midpoint right there, and it's 300. To be accurate, I guess 304. So anytime you take 150 to 300, that's a double. And that's your previous year's midpoint. At some point, you would think this market has a shot to go back toward the previous year's midpoint. If you want a better opportunity here, a closer, quicker opportunity, maybe use the quarterly midpoint. So the quarterly mid here is 258. That's the quarterly midpoint. At some point, you would expect the quarterly midpoint to be hit during the quarter, unless it's a price discovery quarter. For example, it was hit last quarter here. Actually, it did not get hit last quarter there. It was a price discovery quarter. It got hit here, it got hit there, it got hit here. Price discovery quarter, no it wasn't, and then hit here, right? You tend to hit them. So if we're at the edge, the snapback takes you to that level. So watch for the quarterly mid or the previous year's mid If we drop a bit lower, things really start to make sense around 120. You know, gonna get to 120 and return this thing back to 240. I mean, this is where you might want to get greedy on entry price with something like this that's been pounded into the ground. Like, force me to get off the sidelines. Force me to be a responsive buyer. Because if you want it bad, they're going to give it to you bad. And oftentimes that's not the best way to go here. So let it flush. Let's see if it can get down a little bit lower. Man, how low can this thing go? Can it get to 120 or something like that? So keeping an eye on it, but it's already double territory off the 150. But I would love to see a flush and reaction. You need a reaction. You need a reaction. What's a reaction? This is a reaction, right? It's when you have this major reaction and the bars get super wide during those moments. That's what we need, and that will tell us the low is in. And we have not seen that in the least bit in a long time in strategy. But the price back to key levels above makes sense. So strategy is a potential double. This one, again, Bitcoin Treasury. Maybe some of the headline risk headwinds are now behind it because MSCI is going to keep them in the indexes. Maybe that starts a thing. Now, here's the thing with these crypto stocks. It's going to be hard for any of them to rally without the cryptos themselves rallying. So as soon as Ethereum and Bitcoin and the gang put in strong lows, it might be go time on your favorite crypto ideas as well, crypto stock ideas. All right, let's take a look at the next one here. This one's going to be Marathon. Marathon's pivoted to a treasury approach as well and did so perhaps at the wrong time. So inverted check mark down last quarter, closed at the quarterly low. Quarterly mid, $16. Quarterly low, $9. $16 is also value in the short time frame, but if we widen it out, look at Marathon in this range. $16 is a mature value level here for this one with a D-shaped profile. And look at that gray line right there. We're almost there. That's the bottom of value. So basically, you dip to 8, it's a double to 16. Take half off, and you have a free trade. Do you know about my free trade concept? I know those of you in my trading room do. The free trade concept. Price drops into your zone, you get long $8. You buy 100 shares. You let it do what it's going to do. You can put a stop if you want, but let it go get its double. If you get the double to 16, you sell half your shares, and now the first half that you just sold is your initial investment, and you've taken that back, and that's yours now. And the second half of those shares, that's market money. You've just taken that from the market. That position can now go to 0, and you've lost $0. Or it can go to the moon. Which one's it going to be? But it starts with finding a good entry with discipline and patience, returning it to a high value target, which can be a double at times in some of these markets, and taking that risk off. And then from there you have a free trade. That's the free trade concept. We talk about it all the time. And in Marathon, we've talked about doubles multiple times with this free trade concept. This is the next opportunity here. $8 to 16. And again, that's a double, right? 8 to 16. But then across the range to 24 could be your triple. So if you like this idea and wait for 8, be in at 8. And when it gets to 16, take half off. And then when it goes to 24, you can take a quarter off and hold the rest forever. Or take the rest off here and you've tripled on the back half of that position. Whatever you want. And then reload for next time. Because some of these will reload for next time. Look how many times this thing popped and popped and popped and then came right back. This thing has given us doubles after doubles over the last couple of years in our trading room. The next one could be ahead as well. Like I said, though, be patient on some of these. Be cautious. Let price come to you. let the cryptos themselves find strong lows first, and then that's going to be the starting point for jumping into some of these opportunities. That's Marathon. Let's take a look at Coin. Right now, Coin is showing tremendous reaction off the lows, unlike anything we saw last year. It's not the best, but man, it's better than I thought it could be. That's your low here. It dropped off the 200-day moving average. Boom. Closed on the low of the year Thursday. And then Friday, bang, launches up. That's a lower low failure. Probably a bullish divergence there if you're looking at an oscillator. When that occurs, you tend to move back to the prior pivot high. That'll be about 284. Is it done going down? Maybe not. This one's tough. Again, this one's has had a massive maturity here. And do we need to be patient for the next pullback? Remember, our initial buy zone in this one was $40 back in the 22 year. $40. And we said 40 will double to 80. You know, and then on the pullback, we said 80 doubles to 160. And then last year we said, well, no, it was the 120 up to 240. I mean, it was over and over again. This thing just continues to add. Right now, we're not at a spot where we can have one of those big moves yet. We've had a tremendous correction, but we're in no man's land in terms of the range. You know, where are we in this range? The better prices are about 150, and we're almost 100 points off that level. 220 is a decent zone. So Coinbase, I think there's some tremendous upside for Coinbase ahead. I really do. They're doing some tremendous things from the platform side, partnership side. They're doing some great things. I think there's tremendous upside ahead. That's what we said when it was at 40. And it went to 440 after that. Where is the low going to be on this pullback cycle? Once we find that low, the next rotation will give us a double. Is it 200 to 400? Maybe. Do we get a little lower than that? I mean, what would be the best case scenario? Best case scenario is at 150. 150 to 300 to 450 is a double triple. What? So I'm struggling here with the long-term idea because I just think we're not in the zone, so you have to be patient. Do we get the 100-point drop-off? 150 would be that big-time zone to really be in on something like this. From a shorter-term perspective, you have this range here from 284 to the recent lows of 224. That's a great range. You get out of that range, and there's a 60-point move coming. So you break down out of here, you got a 60-point range coming. You rally out of here, perhaps 60 points. So keep an eye on those edges. That's about as good as I can do on Coinbase. That was one that was recommended that we look at in the room by one of you viewers. Another one that I wanted to get to, these two, a bit more excited about Circle. And working on these requests as well as we go. I'm going to get Hut in there. I see Roblox open as well. We'll get to that. We'll do Amazon. I love it. John with the jokes. I've known Frank for a very long time. I'm happy to see he looks like an adult after all these years. That's great. That is great. I know. I don't know if anybody would be surprised by my age or not, but I do finally look a little older maybe. A little bit of the gray is coming through after all these years. I started at Nirvana Systems back in 2001. 2001. So this was a long time ago. Back in 2001, markets were quite a bit different. At times, you're still calling your broker to place an order at times. So it's just different times. And I was a baby in '01 because I was still in college. So when I worked at Nirvana full-time, I was also a full-time student. Some of my longest days during those days where I'd be up working at Nirvana at 6 in the morning, and then I'd have to go to school, finish school, get back to Nirvana, and be done by maybe 8 p.m. It was fun days. It's as good as it gets when you're all in the stock market. I wouldn't trade it for anything. So good stuff there. Now, Circle, this could be tremendous down the road. This is a stable coin platform for stable coins there. You can see that the IPO was hot. They broke the chart right away and got it to 300. For those of you in the room, you know we had it, as one to watch. When it hit 300 and at 297, we said, okay, this one's done. This one's done. Stay away. It's dropping all the way back to 120. And it did. And then it broke 120 and dropped even lower. And now here we are at these lows. And look at the accumulation down here. Little statistics here. Kurtosis. Right there on the profile, leptokurtosis jumping off, and that tells you that you have a high volume node here, but look at how steep the drop off is on either side of volume. And usually you want the D-shaped profile, right? The Gaussian curve right there tells you have well traded markets there. This one, super compressed, a lot of volume. That's like a manifestation of accumulation directly on your chart. They are accumulating here at this price. And so should you accumulate at this price? Perhaps. Again, I'm preaching patience during this Q1 of 2026 market outlook. And can we get 60? Can we be greedy for 60? Because if we get 60, it's a double to the next market structure up at 120. And then you might trade in this zone for who knows how long. But as soon as you bust through 120, it's 180. And now we're walking up the staircase here. So 60 could be a tremendous opportunity if we see it. We're at 82 right now. And like I said, if crypto takes one more dive, these stocks could go with it. And that could be the next buying opportunity. That's Circle. The last one here on the crypto side that I had for you, and then we'll look at HUT as well. BMNR, ETH Treasury Company. We had this one as a buy candidate at between 30 and 20 because of the quarterly pivots. As we dropped into that zone, we said let's just split the difference. 25 is probably a solid opportunity for a double. But it's not the right timing right now. It's not the right timing. These markets haven't found the low. Crypto hasn't found the low. So it's in the right price zone, but the timing isn't right just yet. So 25 entry gets you back to the middle of this key range, and that's a double because the middle is 50. So 25 back to this key range, boom, that's double. And then you're just going up the ladder. So if you can be patient, maybe 25. But if we're going to drop one more time, do we get another round lower? Do we actually get that $20 level? Why is 20 important? Look at this impulse move here. That impulse rally, pullback, that's a key range. The best entry would be 20. That's why it's green there. If we hit 20, it could rally to 50, up to the top of the key range at 70. And if we break through 70, it's opening up the 100% target at 113. This key range right there forecast 113 down the road. I don't know if it's next quarter, Q4 of this year. I don't know if it's next year. At some point, that target, high odds of being reached at some point. But again, you don't have to play to that target. That's just showing you what the longer term potential is. I'm saying if you hit 50, if we hit 25, can we hit 50? If we get 20, can we get 40, right? That's what we're trying to do here on this one. I think ultimately this one may pick things up down the road. I still want to be cautious with these, again, until crypto finds a strong low. And one of them, HUT. This is one of the ones that you all have mentioned here that you wanted me to take a look at. I had HUT on my group list here for this group, but man, It's not a buy opportunity for me here. I'm more cautious about a trap and reverse opportunity. So we have a tremendous key range here. So if you like HUT, key range high, key range low, key range midpoint. The 25% extension here, best zone, and the trap is the best zone in here. Look how many times it got there. Great. And then it returned back to the midpoint here and to the top. That's exactly what we're talking about right now for Circle, right? And sorry, BMNR is done all that. But to sit up here like it's doing right now above the quarterly high, to me, that seems like a bust 2 full trade right there. And we might rotate back into the range. We're still trending up. Still a large trading range. Still bullish overall. But if you don't have a position, I'd be patient. If you do have a position, it's doing quite well. And any pullback could still maybe be a buying opportunity. I would love to see clarity out of this key range. Are we ready for expansion? If the next day is a bust through these highs, then maybe we're on the roll to 67.83 and 78.37. Those two are the targets from this key range. So that's one to keep an eye on right there, is HUT. All right, moving on. Let's talk a little AI. Let's talk a little AI right now. From an AI perspective, again, there's a lot to look at here. The AI trade may be overdone for some stocks. It may be in a correction phase for others. There's so many different facets to the AI trade that you can get into. Obviously, NVIDIA leads the whole way in that, but everyone's in on this thing. I'm going to talk about a few that we've mentioned here recently, but really get into one that I'm very excited about. Let's go ahead and drop into the AI section here. Where am I? We're going to do Palantir to begin with here. And Palantir was one of our favorite stocks to begin the year, the last 2 years. The last 2 years, this was our favorite stock to begin the year. Last year, exploded to the upside. And then in 2024, I said, man, this is one of my favorites, but I can't really find an entry. It's just sitting at 20. And then that was it, 20 to 40 to 60 to 80 to 100 to 125, and it's just kept on going, recently hitting as high as 200 plus. So 10x since we talked about it at our market outlook of 2024. Wow. Last year, I was mentioning, let's get a little bit more pullback, and it bounced off 65 and went ham. So this one is incredible in that it just can't stop, won't stop until recently. It has kind of found its groove in this range. Super large trading range here. When it comes to market structure, this one has done well as well. 245 is the next level up. Okay. Market structure for this is 60 points. Let's see here. So you see this 65 to 125 is 60. Then 60 this way, and then 60 this way. So if this thing is still going to go hit new all-time highs, it's likely 245 at some point down the road. And we're sitting here at this 185, and it's merged the cells. It's merged the cells, which means the next big move is coming. Does it go down first and then check mark to the new highs? That's what I'm hoping for. So again, we're 177 right now. Can we get a 125 test at some point? If we can get a 125, that's a really solid opportunity to take it to 245. And what the heck, just get it into 250 and you double there. That's what I'm looking for out of Palantir. Again, so much growth here out of this one. We've offered it each of the last 2 years, and it's just been full-on race to new highs. Now, Palantir is a unicorn in the market in that it's got the best of multiple worlds, including defense, AI, tech. And when you got that going, and I mean, it's just hard to stop. It's a snowball effect. So you definitely don't want to sell into this. I think with geopolitical events and as we race closer and closer to 2030, you know, you're going to start to see some saber rattling even more and more and more. I think things like this, stocks like this, will be more and more important. So definitely a buyer on a pullback. Can we get a rotation into the 125 for a continuation to 240? That's going to be something we want to keep an eye on. Tempest here. Oh, look at this. Greatest trader ever. Warms my heart right now. My sweet baby girl here jumping in. Aren't you supposed to be in school right now? Oh, no. She's out. Love my baby. Good to see you. Oh, all right. Looking at Tempest. This was a great one last year. For those of you at our market outlook last year, we said if you can get this one at 30, you can double to the middle of the range at 60 and then take it higher to 90. Look at that 90. Look at the 60. And it did it all by February. What? Like I said, sometimes I'm just so surprised by the moves that happen, even though we're clearly calling them out as we see them. It still surprises me that it can do that. It's just incredible. And this is the power of community, which is a good segue here, I suppose, for those of you that want to jump into our charts, our trading room, get some of the tools we're getting, to help us find some of these opportunities, to be a part of some of the traders that are in our room that really provide these opportunities as alongside myself. And that brings me here to right here. And let's see here. With this view right here, let's bring it back real quickly here. Before we get to that, I want to bring up this guy right there. And that's what we're doing. So right here on this one, you should be able to see my screen right now. This is wap.com/PivotBoss trading. And that is in the link in the description below. This gives you access to our Discord trading room. And one thing that you will want here is access to the room by way of a coupon code. So here it is right here, coupon code bootcamp. If you use coupon code bootcamp, you'll get a free month of our trading room. So hit the join now button there. Hit that join now button. Once you get in there, look for the coupon code field and then put bootcamp, all one word, free 1 month of trading room access. And this gets you access to a lot of the traders that are in our room, a lot of the things that we're doing. We're picking things up pretty fast here as we head into the new year. So much more to come as well. But one of the things here, the reason I segue to that is because one of the traders in our room, Peter here, brought this up right here. And this is Tempest. This is one of the stocks that we looked at. And he brought this to our attention. We looked at it and said, wow, this looks pretty solid. And 30 looks like a great opportunity to double and triple. So that's the power of community. That's the power of our PivotBoss community. Got so many great traders in the room, so many folks from different backgrounds that provide their experience. Ask good questions as well. A lot of good questions are asked so that others can really glean any kind of insight from those answers. It's a lot of fun. So as the old adage goes, don't trade in a closet by yourself. I think that's how it goes. Instead, come join the community, jump on in. We got a lot to come down the road. So for Tempest, it's right in the middle of the range again. So for me, in this market right here, you're right at value. D-shaped profile, you got to let it come to you. So this was a great one here in the AI space last time. MBIS was one I gave last year. Now, MBIS was one I said at the beginning of the year in 2025 here, I said, this is one to look out for. NVIDIA is investing in this company. And look at the move. 20 to 140 over the course of the year. Again, it's just incredible. You can't expect this every time. But it's impressive when you follow a pattern here of what NVIDIA is doing who they're getting involved with, and then watching their stocks just rise and fall if they're going to cut ties with you, which we saw last year as well with Serve Robotics and others. Okay, this one's a great one. Look at the growth. Again, after that big time movement, you're going to sit there and go mostly range bound here and kind of digest. Perhaps there is some market structure here that's coming into play. Maybe another move down toward 50. I would just be cautious on this one right now. But here's another new one. Peter for the win here. Thank you for providing this to the room here as well. We saw this a couple of weeks ago, and it is off to the races already. This is PDYN, Paladine AI. And Paladine also, I believe, is in the defense AI sector as well. And that is very, very bullish when you start to combine that, as we saw with Palantir. So what we're looking for out of this one here, we already had the 450 idea. Look at value. It's at $9. So when it was at 450, we gave the 450 to 9 as a double opportunity. And then you could triple it to 1350. If you're not in, obviously, some of us are just now seeing this right now. Others have seen it for the last couple of weeks in our trading room. If we get that pullback, I would say anything really 650 and better. Because even at $6.50 where we're at right now, doubles to 13. And that's what we're trying to get to. We're trying to get this thing up the curve toward the top end between 11 and 13. So if you can get it in here, divide that by 2 and you got yourself an entry. If you're trying for this one, it's the 450 entry. Again, that was a couple of weeks ago when we talked about that. But this is a great one here. Look, the other thing I'll combine with this is our PivotBoss bands, right? The yearly bands here. This is S3. That is, so third standard deviation below value. Value's up here. When you're 3 standard deviations and into the 4th standard, best buying opportunities that come out of those situations, especially when you have a good trading range like this. So we could be looking at a great rotation right up the range that takes us all the way back up as this mature trading range takes hold. Now, a double or even a triple, if you got it nicely all the way across the range, that sounds good, right? This one might have more down the road. Last year, I suffered from a lack of imagination on how far those stocks could go. We had entries called at anywhere from 20 and 1750 and 30 and 40, and then those stocks ended up at 200 and 180 and more. If this entry at 650 takes hold and we do get to 13, look at this massive cup and handle pattern here. Do we get through 15 at some point and really open up the upside? Because that's where things could really get interesting. This is a stock split, a reverse stock split here. So look at the cup and handle. Are we headed to 45 long term? 45 long term, maybe. Again, lottery ticket approach. I'm not saying bet the farm on something like this. You bet the farm on Nvidia's and some of the best. Paladine could be a tremendous opportunity, but just, again, mind your risk. Play on appropriate leverage. But this one looks tremendous. It's already got the move. It is Thursday. We got one more day in the week. This is a weekly bar. Next week, do we get a midpoint retest at this week's mid? That could launch things to the upside for this following week. So this one could be a tremendous opportunity ahead. And again, thank you very much for Peter and others that share so much in our trading room. It really makes for an awesome environment. A lot of great money-making opportunities. All right. I know we're going long here. There's so much to get to. I'm going faster and faster. I'd like to get to nuclear. Here. So let's do that. Yeah. Okay. Nuclear's next. So nuclear, one of our tremendous opportunities from ahead. From before, and there's still tremendous opportunities ahead. So nuclear, one of our favorite groups, because we saw it blossom from the very beginning. Again, one of our traders in our room, JP, brought one of those candidates to our attention a couple of years ago, SMR. It was a $4 stock, rallied to 8. We said, okay, pick it up at 4. We might be able to return it to 8 and 12, and then it ended up rallying to 50-something by the end of the year. Last year. We had it as a buy candidate at 12. So this is incredible how often these stocks have provided tremendous opportunities. We've built out a whole group for it. Again, we did it all live in our trading room. That collaborative effort really paying off. And let's look at some of those nuclear candidates right now. We will start with SMR. So if I pop up here the SMR chart, this is one right now where it's already had tremendous movement, and then it's had a tremendous correction. So last year we had it as a buy candidate at 12. So during our market outlook in January, we said, okay, if it hits 12, it's an opportunity to double it to 24 and triple it to 36. And it did that and then continued higher. And again, ultimately getting over 50. So lack of imagination on how far these things can go. Before that, we said if it bounces off this 10 zone, we have a shot to double it. Or it was really $8 at the time. $8, there's a shot to double, triple. And before that, we said pick it up here, et cetera, et cetera. We've seen the waves. And when you look at this now, with this view, there's your expanding envelope of volatility there. And last year we said if it gets 12, we might get 50 out of it because of this thing. And look what it did. Incredible. So when you look over here at this right now, it's in the zone again. And I told our traders when it hit 20, once it hits 20, it's in the spot where we could get a double out of it back to 40. We could get a triple of it back to 60. And we may actually get into 80 on this next run. That's a very real possibility. We look at this key range right here, that the recent key range that developed, and 80 is the 100% target. I'm telling you, this has potential here. And I know many of you know me. Some of you may not. So I don't want you to think I'm a carnival barker here saying, you can double any time. We're just showing you exactly what we've done over time and how the markets have played out. In the live market outlook last year, we said 12 right there. If you can pick it up at 12, you can double, triple. It did it. Right here, I'm saying you could double, triple, quadruple maybe to 80 if you give it enough time. So, with this one right now, anywhere between 14 and 20 could be a tremendous opportunity. Is there more pullback to come? If so, I would have to think it has to be pretty modest, because we've just endured a 70% correction. What are we going to do? Another, 100% correction here? No. So we've done about as much as we're going to do. Maybe we get a new low. Maybe we don't. I would say $20 is still as good as it gets here. But you may still be able to get somewhere between 14 and 20 for some double, triple, quadruple action down the road. SMR, still my favorite. The OG of our nuclear group. And again, JP in Texas, shout out, gave us this way back when, and then we've followed it ever since. Some of the other ones, Oklo, man, another great one. Shout out to Dwayne. Dwayne found Oklo for us at the same time back here and said, hey, if SMR is doing well, I just found this Oklo. The very next day it was up like 40% and then just took off. The power of community at the PivotBoss Discord trading room is incredible. Earlier last year, we gave the 17 to 20 target for the entry for a shot to double and triple, 40 to 60. It went from 20 to 200. 190, y'all. This is incredible. Again, lack of imagination on how far these prices could go. I'm not saying they're going to do that again, but there's opportunity still. So here, bounced directly off of year-to-date VWAP, 63% correction, and it's been up to start the year. I'd like to be greedy for this one and see if we can get 60. If it has one more drop into 60, you're doubling to 120. You're tripling to 180. 60. Can we get 60? So keep an eye on 60 for Oklo. There's more, NNE, Centrus. I'm really kicking myself on this one. This was an $80 stock when we said, hey, it's an opportunity here. It was $60 stock, sorry, off of these lows. And I said, but it's only a double to 120. You see these other ones, SMR and Oklo, we were saying double, triple. This was only a double across the range. So I said, don't worry about this one. It's just a double. This one ended up going 60 to 460. What? So don't listen to me and then listen to me at the same time. This is incredible. I'm still blown away. Okay. So tremendous opportunities here. I like SMR and Oklo right now. Some great opportunities there. Here's one thing, though. NLR is the nuclear ETF, uranium and nuclear ETF. I really feel like this softens the blow on any major pullback. You saw 70% correction there in SMR. By comparison, this one here pulled back 30%. Not as bad. So this one really provides some exposure while dampening the downside risk, but also does a really good job of the upside risk as well. Because look at this thing going from 65 to 165 last year. ETFs just don't do that normally. At least not your grandparents' ETFs. This is a new wave of stuff, and it's looking strong. So NLR, a great way to be a part of the nuclear space if you're having trouble finding a name that you like. All right, last ones here. As we wrap it up here, we're going almost 2 hours strong. Thank you so much for riding with me, everyone. This has been awesome. We've had a tremendous amount of viewership here, so thank you very much. And it's only going to get stronger. Only going to get stronger. All right, looking at what's our next one here? Space. Yeah. So space, we're going to look at a few stocks here. Let's start on this end. Now, the thing about space stocks, maybe they've run their cycle, right? We're going to talk about some space stocks to watch, but they're kind of pricey right now. They've already run their course. They've just finished running their course again. I mean, we're still seeing some tremendous moves. And one just doubled. Just doubled. And I just called it out in our trading room last month and said, hey, we're sitting at $8 in Intuitive Machines. This could double to 16 over the next 1 to 2 quarters. It did it in the next several weeks. Incredible volatility in these names. But because of that volatility, you have to be picky about entries. So I keep urging caution and patience on some of these opportunities. Let's take a look at space stocks. Where are we here down the list? There we are. We're going to start with Rocket Lab here. And as we look at Rocket Lab again, look at this. It just went 40 to 88. It just doubled from the lows of November 21st. So if you're not paying attention to some of these stocks here, you're leaving a little bit on the table here, right? There's a lot to like. Look at the move from 20 right here, which was our zone to watch, $20. Right there, that quarterly low is where we were watching for a long last year, and that's less than $20, but let's just say 20. It doubled to 40, 60, and 80. Look at this. Incredible movement. But what are you supposed to do now on these highs here? I mean, I'm not buying these highs. I'm also not selling to short, but we could see a tremendous counter move phase here. So you can see we're just not there right now. We have to be patient here. We're at a cycle high at the moment. New highs. It hit almost 90 here. Or it did hit 90, huh? What is that? 89, 87. Wow. ASTS, another one. Space Mobile, big time movement. We had this one as a buy candidate last year, $20 as well. $20, and this one went to 100. Rocket Lab went up 4x. This one said hold my beer, up 5x. What is up, y'all? Incredible. But again, these were on our radar for our traders. We've known about these for a long while. It's too rich for me up here. So let's look at Intuitive Machines. This is the one I mentioned right here. Just went from 8 to 16 and is now hit 20 today. It hit 20.02 today. $8 to 20, and it just made a move to the R3 band. It is officially overvalued. 3 standard deviations overvalued right now. So this one just doubled, and we talked about this one in our trading room on that day right there. That's our thrust reversal signal, by the way. I haven't even said thrust reversal in this webinar here, or this live stream. Look at this. High range sell-off. The next day, price drops to the low, rejects, price is below the low, recovers the low, finishes strong. That's our classic thrust reversal. It's a PivotBoss Masters technology there that just does so well for us so many times. Short term, medium term, long term, intraday, it just doesn't matter. What a great tool that is. And when you combine this tool with the previous low, previous session's low, previous week's low, previous month's low, in this case, previous quarter's low, it's a buy. We got lucky to see it that day, and at that point I said, all right, well, it's time to be long here. Let's go for a double. But it happened so quick. I thought it was going to be a 1 to 2 quarter move, and here we are. So patience on these stocks right now. But I'm going to give you a new one here. There's a few ones. Fly. This is Firefly out of Austin, Texas. I guess more specifically, Cedar Park, Texas. We have Spire Global. That's going to be one to watch. And then you have Sidus Space launching here recently from 50 cents to $5. This just went up 10x. We'll share these for another time. But Firefly, keep an eye on this one. This is a new IPO. Sometimes on these IPOs, you can either run to 300 first and then get crushed, or you can get crushed right out of the gate. Either way, you're going to have to be patient, and then the moves start to reveal themselves. In this one, a great rounded bottom, already developing. Very clear VPOC here. And we could be making the move again that takes us all the way back up to a gap fill and to the previous mids up above 50. Is 50 in play? If 50 is in play, then a 25 test gets us there. But if it's not, are we going a bit lower? How low do we go? I would say again with this one, be patient. Be patient. A test of the low. Oh man, if this hits the low here at 16 and say it goes to 15. Wow, 15 to 30 would be just sick, right? 15 to 30. That's a double just right here. So you got to be patient. I like Firefly for some potential down the road. It definitely needs some more time in the oven before it's done. But keep an eye on it, because as soon as it busts through 32, it's going to be open season to go fill that gap at 50 and beyond, in my opinion. Got to keep an eye on this one. This one really could be good to go down the road. All right. That does it for the space stocks there. I'm not talking quantum today. I know we've gone long right now. Quantum, not the best opportunities at the moment. Maybe Rigetti. Let's do Rigetti. All right. Let's do quantum. If we've come this far, let's go ahead and finish it. All right. Quantum. Where are we at with quantum here? I'm going to start. Okay. All right, let's do that. Let's do this here. All right, with quantum stocks, we had some tremendous opportunities in quantum in the previous year to 2 years. They've played out tremendously. It's like nuclear in that you're going to get massive moves to the upside, then massive corrections back down. So you have to wait out the massive correction, and I think we've done that in Rigetti. So let's move over and show Rigetti here. There it is. This correction is 64% in the making right now. And the recent movement has looked like this. Remember Rigetti. Wow. Okay, this is January 7th last year. This is January 7th last year. And I said, hey, y'all, quantum is my thing here. I really like quantum. But they've exploded to the upside. You're going to have to be patient. With Rigetti, we're looking for like a retest of $6. You know, and right now we're trading 18. So you have to be patient. And then, again, NVIDIA CEO Jensen says, quantum ain't nothing. And they gap down the next several days and dropped. So while I say be patient on the pullback, the very next day it opened up some opportunities, and this thing dropped to $6 here. And from $6, it never tested that level again. And by the end of the year, this thing tops out way up here at 58. 6 to 60, y'all. So last year we offered this opportunity at $6-ish, right in that zone. Look at where it ended up again. We're not going to do that again, right? I'm just saying it's just not something you can expect every time. Although we've just seen countless example here that has done exactly what we had hoped. This time around, we're going to do the 20 to 40 to 60 to 80. So we're looking at this looking like SMR. So SMR and Rigetti, I would put them kind of in the same boat. If this thing drops in the 20 to 15, it's an opportunity back to 40, back to 60, and maybe down the road way higher. This, though, quantum is the epitome of maybe too early. You're going to get big-time moves up. You're going to get big-time corrections. It's not there yet, which is what Jensen said. But it also is there, which is why Google's rallying so much, right? They in fact had their Willow chip, their quantum chip, do what, 13,000x faster than the next fastest supercomputer on a problem. That's quantum right there, right? So yes and no. So I would just, again, high volatility in these groups, but big time profit potential, but just be patient for the entries. If you can get 20 or better, it's a double to 40. But like I said, if you just sit there and say, I'm going to be in at 20, that doesn't mean it can't drop to 12 first. So judge it, see if it gets a good reaction, and then be in for the move. That's Rigetti. It has a shot here. If you want a lottery ticket play, QSI is the lottery ticket play for quantum. You can see it's sitting right on support right now. So between, I would say, $1 and $1.20, there's an opportunity to double to $2 and $2.40. So 1 to 120, you're doubling to 2 to 240. Look how many times it's done it here recently, by the way. There's one time right there. There's 2 times. There's 3 times in the last 13 months. It can do it again. But like I said, this is not a bet the farm candidate. This is a lottery ticket play. You do whatever. You put in what you don't mind losing in this one. And, you know, if you do it at the right spot, ideally you get rewarded, take the money off, move on to the next opportunity. Lottery ticket play in QSI. Let's get to a couple of requests here that I did not get to. Roblox is one of them. Thank you for your patience there. Roblox getting crushed. I was surprised by this one. I didn't think it, this rally was just bananas. And we've been waiting for something like that in a while. We mentioned once it finally breaks through 50, it's going to be open season. But before that, we were talking about the 25 to 50 trade, because 25 kept doubling to 50 or getting close to doubling to 50 over and over. But look at the large accumulation pattern. When it finally bust through 50, it was open season to the upside. I mean, it rallied all the way to 150 by the end of the year. So there's your test at 50 right here. Last Q2, rallies to 150, double, triple, what a move. And now dying all the way back down. I feel like this thing goes all the way back to 50. I really do. It's going to wipe out this entire move it did up. This was clearly an accumulation up here. It's been heavily sold here recently. How did I change my my color there to red? That's kind of funny. I'll have to go back in the replay and see how that happened. Now, if we got to 50, bounce. It's a bounce back play for a 50% rally back to 75. So I'm being patient in this one here. We are in a good zone for rejection. You watch between the previous low and the 25% extension. I just don't see it right now. I don't see it at the moment. And you got to let this one wipe out. So 50, I think 50 is the spot to watch. 75 is the top end. And we're there now. So 50 to 75, okay, every 25 points, right? So every 25 points, we can do this right here by going very quickly. Here's 50. And that was the breakout point we were talking about before, right? Let's go right here. Let's make that 50. Boom. All right, now let's add 25, and that is 75. Boom. And then you add, let's do it this way, another 25, and that's 100. And then we can go another leg here and go 125. This one has the same increments as Bitcoin. And then our last increment here, 150. And where was the high? 150. This is market structure 101 right here. Every 25. We can go down there to the 25 and get that too, but we'll just focus on these. So when you look at this market structure, it's hanging on to 75. If it fails, 50. And then you trade it for a return to 75 and maybe 100, right? That might take a while. I'm not thinking this is a fast double, by the way. I think this is a decent 50% opportunity. If it breaks 75 and drops to 50, 50 to 75 is your opportunity, and that is a 50% return. That's the thought right there on Roblox. A couple of other requests here. RVMD. Yeah, let's take a look at this one. Woo! Revolution Medicines. Okay, I guess they solved cancer. This one, especially the last couple of days, blasting off to the upside. I guess we could look at the Revolution Medicines gains at the report. Co in talks to be acquired by Merck. Okay, so they're going to be acquired here. Acquired. That's always a great thing. I think with this, something like this, with that type of news, you know, if you're not already in, I'm kind of holding off, staying aside here. The other thing here, if you are holding this and they're being acquired, if the deal falls through, we drop all the way back to where we came from. So that's something to keep in mind. If the deals can fall through, yes, they're being acquired, but if it falls through, it drops right back. Keep that in mind. So if you're in this windfall, take the windfall profit. But you have to kind of let this thing reset if there's going to be a fresh entry. So some thoughts right there. Let's take a look here. Yeah, let's take a look. PayPal. I'm in here right now as long as you all are in here. We're doing this long form. Let's go. I appreciate you all being here. And I am locked and loaded and ready to do this again. Really, really am. PayPal here. Downtrending price action right now. This one is near the lower end of the range for both the quarter and the year. That's good. You like that. You know, if the thing is dropping, there's opportunity after significant pullbacks. Having said that, I have been off on PayPal for a while. And so I haven't even looked at it here recently. Let's drop these real quick and just look at the chart with some bands. There was multiple times where I was saying that I think this thing was a long candidate, including in here. And it can bounce, but it also gets rotated right back down. You look at the weekly chart here. This is the weekly chart as of late. Look at that. And ever since it dropped in here, I was trying to see if we can get it going. And over here, rounded bottom, look, can we get it going? And I've been stuck with this one. I feel like PayPal's stuck in the mud. I stopped coverage on it because it just wouldn't go. It kept making me look like a fool. A fool, I say. Because it would go and then it'd fail. And it'd go and it would fail. And it was like, okay, I'm done with this one. So I feel like PayPal has gotten pushed out by all the other ways that you can do what they do now. And the chart says it. It's tough. I don't like this one very much. I know it's down, and there couldn't be a rally. So whenever you're dealing with all this, you're probably just now going to pay attention to 90 down to the recent low of 50, and that's your range. So if you like this one to begin coverage or begin a position, you have to take out these lows. And on a lower low failure, you have a shot for this 95 here. That would be the play, in my opinion. Yeah, that one's a tough one. Another one here. Open. Open here. This one has been really bullish here lately. And I'm trying to figure this one here. You know, really, really big movement to take it from $1 to $11. So what a move. We can probably look at some news here and see what may have driven that a little bit. I know during the pandemic, they may have over leveraged themselves, and then we saw the big drop that came from it. They've now kind of unwound perhaps what led them to drop that way, and now that can free up some stuff to the upside. Is there also a change of leadership? There might have been a change of leadership. I'm trying to remember now on Open. I haven't brushed up as much, but I know that this one dropped from over leveraging, and then from there, maybe the game plan has now kicked in to get things rolling to the upside. So having said that, this level right here, $5, is kind of the top of the breakout point here. It's trying to hold that zone. That's kind of a major zone to watch. You know, if it can hold 5, maybe we can start to step this thing back up. Man. I'm not getting the great vibes out of this one that I would get out of some of the other candidates that I'm like, oh, this looks great for a move. But I can definitely see the effort it's giving. And that's important. At least it's effort here. $5 would be a good level to watch. If it can stay above 5, you got a shot to 10. And then maybe we start working our way up. Maybe we do. So we'll keep an eye on Open. I'm sorry I don't have a better clarity on this one right now. $5 the one to watch. Maybe there's a key range here. And that can provide some nice opportunity there. Let's see. From that low, probably not. You would probably have to do it from this low. Let's look at that real quickly here. Let's do what a key range would be. Bang, bang, 28. 28 right there. There's your key range. So that's it right there. I like that key range if you're going to engage this one. That's your impulse move. It got back to the middle. And the target is 20. The target is 20. Best entry would be down here at negative 59 cents. So, you know, take this with a grain of salt there. You're not trying to get in at negative 59 cents. But $5, like I said, 5 can take you to 10 to 15 to 20 maybe against that key range. That could be something hopeful here to hang your hat on. But I'd be cautious in this one again just because it really hasn't found its footing just yet. All right. Man, oh man. We've come a long way here, y'all. We've come a long way. Again, thank you very much for joining me here for our first live stream of the year, the first one in probably a good 10 years. Here's what I want you to do. Give me some comments in the description or in the comment section below. Tell me how I did. Tell me how I can improve. Again, this is something that if it's well received, if it's something that you'd like to see more of, I'd like to do this a lot more often. I mean, let's get live at all types of hours during all events, and let's just have some fun together. So I'm looking forward to really making this thing take off. Really put a lot of effort into the programming of this content for today's show, and really, really happy with all of you sharing your time with me. I know it's a long time to be in here for 2+ hours, but you all sticking with it. Thank you very much. The support you've given me is tremendous, and I'm looking forward to paying it back with tremendous content for you the rest of the year here as we really try to provide some tremendous value, not just for our trading room members, because it's a hidden gem in our trading room. It really is. It's time to open it up a little bit and have more folks really profit from what we're doing here. So this is going to be a lot of fun. I am so excited for what's to come. Thank you very much for joining me, and we're going to call it a wrap. Y'all take care, and I'll see you soon.